Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, August 9th, 2011 is sponsored by Realtik. Alright guys, let's get into the mix today. We do have a rally on Wall Street underway. Dow Jones Industrial Average up 178 points, 1.65%. NASDAQ up 72, 3% rally there. And the S&P 500 up 25.5 or 2.25% rally there. Now again, the markets are inching up obviously over an oversold market from yesterday. The markets crashed lower, down 6 to 7% yesterday. Obviously somewhat due for a market bounce considering over the last 2 weeks the markets are down about 15%. But the key here is this market may fizzle or it may shoot higher at 2:15 p.m. Eastern Time. Why is that 2:15 p.m. Eastern Time significant? Because the Federal Reserve will release their FOMC policy statement. The markets are hinging on every word that's going to be released there from Ben Bernanke in terms of whether or not this market will, again, rally higher or not, whether or not we're going to get QE3. Is there any hint of QE3? Whether or not he thinks the economy is not on a path to recession. It's all key here, folks. So important. And again, you can clearly see early in the day the markets had a nice gap up, a little bit of a reversal down to a perfect double bottom and gap fill. Here's gap fill from yesterday, double bottom from this pivot low bottoming tail. The bottoming tail actually held up, and the markets, again, once they hit that, surged to the upside and are now just going sideways. The sideways characteristic of this market is because everyone is just waiting now for that kind of FOMC policy statement on QE3, what's going to happen, and again, ultimately what Bernanke thinks of the entire economy right now, considering what is going on. And trust me on this one, Ben Bernanke will choose his words very carefully. He knows if he says the wrong thing, the markets could easily go down to minus 300 today. The reason I'm using minus 300, folks, on the Dow is because last night, overnight, the Dow futures were down 300 points. So it's actually pretty miraculous. After being overnight down 300, the Dow futures are now up 175 points. Now, do we have a capitulation bottom in the market? First of all, let's go to the daily chart here. Yesterday, we ran into this major level. There's a gap fill. You can see this little pivot top right here and here. Both of them got tagged and pierced yesterday, and we went right to this gap fill. That's what the major level we're holding right now. If, and I repeat, if you take out this little blue line down here, which is a major level, you ultimately do not have any major supports until this pivot low at 104.60 on the SPY. So it's actually imperative, if the market's not going to see a major drop, that we actually hold this little bit of a level here and continue to bounce. Look at the fall here, folks, and one thing I pointed out to the Research Center subscribers, and by the way, if you want to become a Research Center subscriber, you could actually just try it out by taking the 7-day free trial at InTheMoneyStocks.com. But one thing I noted here is yesterday we completed the head and shoulder pattern, actually went a little bit lower than the completion target of the head and shoulders. Look at this beautiful head and shoulder pattern right here. We sold off, actually closed below it. Today we're bouncing back to that completion data level. In addition, if you look at the DIA, which is the Dow Jones Industrial Average, this actually perfectly tagged the target of the head and shoulders pattern yesterday right here at the close. There's your shoulder, head, shoulder, breakdown neckline right here. You can see its completion right down there. And interestingly enough, the NASDAQ actually did not tag its completion level. So it's almost like the porridge, and I explained this in the chat room today, which there's another free trial if you want to join the intraday stock chat. But the market was much like the porridge is too hot, too cold, and just right. The Dow Jones Industrial Average, just right, perfectly to target. The S&P, which we look at the SPY to gauge that, a little too hot, went through the level. And the Qs, or the NASDAQ, which is what you really want to look at here. Let me bring up the NASDAQ chart. The NASDAQ was a little bit on the too cold side. It didn't quite get to target. Target was at 2,300, which is right down in this lower level. You didn't quite get there. So it's kind of interesting that one got through it, one got right exactly to it, and the other one didn't quite get there. All right, again, very unique type of situation. All three have the head and shoulders patterns. Here's, again, your head and shoulder on the NASDAQ chart you're looking at right now. But let's go back to the SPY and just take a little gander at this chart again. Intraday, folks, markets are again on pause. Notice the volume here is dying out. That's because everyone's waiting. Once you get this Fed statement, folks, you will see a surge, a huge surge in volume. All right, and again, we're still doing good volume today, but it's nothing like yesterday. Yesterday we did 650 million. Friday we did 600 plus a million. I mean, that's volume where you would almost anticipate a capitulation type move. But the one thing I would say about capitulation, folks, is that we don't have a bottoming signal yet. Like, you don't have a bottoming tail, you don't have anything like that. You do have the volume, but again, that leads me to believe we're going to have a bounce here in the markets over the next couple days, maybe the next week or so, and then at some point we'll actually come down and take out these lows again and go even lower. So I did pick up some long positions yesterday, half positions to keep it a little on the safe side. Those are doing well today, but I'm not looking to accumulate huge positions because of the scariness of the Fed comments today. That could reverse the market, and ultimately, even if we do get a bounce, I do think after we make profits on these longs, I'm not going to hold them forever, and then we're going to start to see more downside. So again, it's all about timing this market perfectly. And again, there's been some great bounces out there. A couple stocks out there that I'm currently in. I'll give you guys one. Juniper Networks right here I picked up yesterday in the money very, very nicely on Juniper. Again, buying it down in this lower range yesterday. I think this is going to have more upside. I love the in spirit of bullish pattern intraday. Another play that I've been holding on for a few days is OXGN. It's a small cap. Take a look at this move today. This move is a ginormous move, up 50% today, 45 to 50% today. Right now, it was higher than 60% up at the highs. This is an unbelievable move. It was a no-brainer because if you look at the chart, it ran on some good positive news and such, all the way from basically $1.50 to $6 and change. It then consolidated all the way down to about $1 here. Again, notice the pop there, easy 50%. It probably goes back above 2 at some point in the not too distant future on any sort of news. Any news in this thing will surge in a major way. Again, my target, if you get positive news out of here, would be literally 100% gain from here even to the upside. So keep an eye on that. It's only if you get news there, though. They need news to continue this move up. A lot of naked shorts in this play as well. Probably one of my favorites a few days ago. As of today's move, maybe it's still a favorite of mine, but obviously it's had a big move already, up 45% at current levels, trading at $1.60 from a close of $1.11 yesterday. All right, again, across the board, folks, everything's bouncing. Caterpillar's trading up nicely, up $2.25. You can see the same type of chart as the spiders. You're consolidating now, waiting for the Federal Reserve. Apple Computer, same thing here. Apple's trading up nicely today. Notice on Apple's daily chart, look at what it hit yesterday. Did you need any better of a signal than the hit of the 50 moving average? And also notice this little pivot right down here. See this little consolidation? Just take those levels right there, draw it right across. You actually had two signals right here that this was going to be support at the 50 moving average and this pivot line right there. So a beautiful signal there. Google, let's take a look at Google. Google came in and kissed the 50 yesterday. Didn't quite hit it. I would have preferred to see a hit, but also notice the choppy consolidation right here. Just draw that line right across, and again, you get the 50 moving average support area right in there as well. All right, taking a look at Chevron today. Chevron, beautiful bounce. I actually gave out Exxon in the intraday stock chat as a buy today. It worked out perfectly. Since that buy alert, it's actually up $1. Let me show you that chart, and this is just intraday. Take a look at that long tail on Exxon's chart. Look at this, guys. See this gap window, gap fill area right down here? I gave them gap fill today in the intraday stock chat as a buy. Look at that. And then again, we talked about even down to this pivot low would be perfect. Look at that. Right in there, I gave him a little X in the intraday stock chat, said this is your area to buy as a swing trade, and sure enough, amazing move up. This was down as low as $68.78. It's above 70 now. Basically a $1.50 move off the lows. Truly a miraculous and amazing type of move there. Just knowing your levels, folks. Look at that level right there. No-brainer level. Great move on Exxon. Exxon's actually just flat on the day, but the key was to recognize that support and pick it up down in that range. All right. Other than that, I'm just kind of scanning through. Bank of America, which got pounded 20% yesterday on major fears, is actually having a nice little bounce today. It's not a huge bounce, but it's a solid bounce. Basically a retrace bounce of about 7% after dropping 20% yesterday. Again, it's all about the Federal Reserve, folks. That's all I can say. Watch the Federal Reserve. The market needs some positive comments from Ben Bernanke and the Fed pals. If they get it, markets should rally. If they don't, be very careful here. Make sure you know your stops just in case you get a bad comment here from the Federal Reserve. I don't think it's going to be bad, but again, it's all about how the market interprets that. One more thing, folks. Make sure to come join the Research Center and the Intraday Stock Chat. Take the 7-day free trial. It's free, no obligation. Or you can cancel before the end of the trial. No harm done. You don't pay for it. Only if you decide to keep it, you pay for it. All right, have a great afternoon, folks. Again, another solid day in the chat room. Good day in the Research Center. Let's make some more money this afternoon on this volatility. Take care.